Forrest is pushed out of the company by the major shareholders. Bondholders saw a return of 25 cents on the dollar. Twiggy becomes the richest person in Australia, and it was less than 4 years from the first hole to the first ore and commercial production.
In the space of 20 years, JD, Fortescue went from being a shell company to being worth over $100 billion and paying out more than $42 billion in dividends. It's truly the greatest story of wealth creation in Australia. And as a result of that, we're so curious about the history here. You're curious about the history, and you're going to go deep into the story, the making of the early years of Fortescue.
What a story, right? There is no shortage of controversy, of excitement, of tales, of ups and downs throughout the whole story. And I thought it was just a tale worth telling, don't you reckon?
Worth telling, absolutely. Strangely, like it kind of it happened before us, like this tremendous, value creation story of Fortescue. But it was always kind of like something that we're curious about. But admittedly, I'd never really done the homework to know all of the nooks and crannies and details. But this one's a roller coaster.
It intertwines with the most fascinating time in commodity markets, in Australian commodity markets history, and global commodity markets history. This is it's also a story of the emergence of China and how that just upended the Aussie mining business after, quite honestly, decades of kind of dismal performance of downward trending commodity prices. And boy, was everyone in for a sharp turnaround.
It's a story of entrepreneurship, stewarded by none other than Andrew Twiggy Forrest, who is an Australian icon and gets his fair share of attention as a result of that. But
fair share attention.
But the force of nature that he is intertwined and always will be with Fortescue.
Yeah, 100%.
The characters are massive here.
Yeah, and we're going to focus on the first 5 years of the story here. This is 2003 to 2008, and it's it's an eventful, packed in 5 years like none other. So let's rip in, mate.
Tell me where things start off, because Twiggy had he had a preamble before Fortescue.
He did. Some might call him the stockbroker to Alan Bond. There was a whole history in broking. But I'll start the story with Anaconda, because that was his first go at running a mining business. And it will set the sort of scene for the kind of form or the standing that Twiggy was in pre-FMG. So he ran the business from the mid-1990s to the early 2000s. And Anaconda Nickel tried to get the Murrin nickel laterite project up and running. They built the plant. They got it up and running. It didn't quite hit nameplate. It was a complex journey, but already Forrest's his sort of status as a legendary sort of salesman across the industry has been cemented through his ability to raise capital, to convince people and bring people along with the journey, and to try their hand at developing a project that was very unique in the Australian landscape.
Well, the technology itself was nascent, right? We talk about the way that HPAL technology has completely transformed the nickel market today with its low-cost application to Indonesian ores. But my God, were there some real teething issues when it was applied to the West Australian ores.
Yeah, they were 30 years early, and it was these guys as well trying to run 45,000 tonnes per annum of nickel output, and a couple other sort of smaller operations that were coming online at around the same time. To finance this thing, Twiggy did something unique, and there was a whole bunch of unique things beyond just the HPAL processing that was done to try and get this project off the ground. He went to the US bond market, raised US $420 million, brought in the likes of Glencore, who took a big stake in the project as well as in the company, Anaconda Nickel, bought in Mark Rich separately from Glencore. This is after he had separated from the company he founded. And then later in the piece, Anglo American comes in. So the ambition was massive. It was clear as day. There's this snippet that jumped out at me reading this newspaper article, and I think about the year 2000, when Anaconda's in a bit of strife, and he's asked, would he ever sell the business? And he just looks the reporter in the eye and says, how often do you get the chance to establish a major mining house? So he knew what he wanted to do, and he didn't quite achieve that with Anaconda, but it sort of set him on his way.
The vision was bold and big even before there was anything in some sense.
And you see that with entrepreneurs, right? So the persuasiveness as well, you see it in so many different ways. Managed to get the Prime Minister, John Howard, to come and open the facility at this grand opening. I think there was 300 odd people there. The plant barely worked at this point in time. It's just
generous.
It's spitting out a bit of nickel at the end, but there's the flash, there's the Ritz, there's the cameras and everything. But eventually, in sort of 2001 type timeframe, Forrest is pushed out of the company by the major shareholders. At that point in time, they had $800 million in debts. The bondholders, who at that point had lent US $400 million, saw a return of 25 cents on the dollar. And Glencore wrote this down as the biggest loss in their history at that point in time. So off Twiggy goes into corporate exile, takes a year away with his family, goes to Europe. He'd been running this company for nearly a decade. And
how old is he at this point in time too?
At this point in time, he would have been in his late 30s.
Yeah.
I believe he was 41 when he came back in and started Fortescue.
Right.
So he walked away with a decent percent, 4.5% of the company, Anaconda, who had seen their ups and downs, but it was still worth a bit of money. And he had a severance package, but he'd taken on leverage. He'd borrowed on margin to buy stock. So things aren't exactly hunky-dory on his personal finance department.
Right. Yeah.
He kind of has to restart-ish from that point in time. And that is the concise summary of his time in charge of Anaconda Nickel.
With it, when we're going to get to Fortescue, obviously, is the next chapter, but were there people that he brought together from a team perspective that would then emerge in the early days of Fortescue as well?
Not massively, not like we've seen in other sort of stories. There are certainly reoccurring characters throughout his sort of broader life, but from a technical perspective, it was a very different project. It was, Fortescue is much more a logistic type project. So you didn't see a whole bunch of that when he comes in. It's not to say that there weren't lessons. There were so many lessons that he learned from that time at Anaconda that you're just going to see through every sort of facet of the Fortescue journey.
Debt.
Debt is a big one. But, things like how you build the project, who has control, ownership, both with the company and the building of a project, that's just a couple. And we're going to see plenty more of them as we kind of go through.
Mate, not every miner gets to make that same decision as Fortescue to bring it all in-house, that engineering in-house, delivery in-house. In fact, many miners, they've got to rely on proven experts. And when you're relying on proven experts, you want expert operators like Axis Mineral Services.
Mate, Axis have been crushing it, literally crushing it for years, all across the goldfields, companies of all different shapes and sizes. I seriously don't think there is a mine in the goldfields that they haven't worked for.
Like mobile crushing, ore sorting, that's their bread and butter, right? And now they've stepped it up. They've joined forces with Rawbeck's group, unlocking capability that we haven't seen before. In-house engineering, mate, they've got it. Civil works, well, West Force is part of that family. ROM walls, haul roads, airstrips, Axis Mineral Services, mate. Turnkey solution is what they can offer. And I don't use turnkey lightly.
Mate, and you mentioned the bread and butter as well before. So that's the crushing capability. And that's where they're about to change the game. So Axis can now build, own, and operate these semi-relocatable crushing circuits. That means the miners can get rapid mobilisation, reliable tons, no upfront capital, which is what we love, mate. You get a huge capex saving by using Axis Mineral Services.
Are you saying they can do the whole front end of that plant without capital?
Check.
That's enormous, mate. So if you're planning a mill expansion, you're restarting an old plant, you need a front end that just fits for purpose without the capex. Talk to Axis. They'll come up with a solution for you. And I know this because they're now bolstered by industry veteran in the crushing game, mate, Jason O'Rourke. In fact, he's never come across a rock he can't crush.
Give Axis Mineral Services a call right now.
Okay, so he's taken a year off, comes back, and the beautiful thing about this industry, mate, you can always reinvent yourself. And I'm sure his reputation would not have been in a good place after a massive blow up like Anaconda.
Yeah, I think that's safe to say. If you've been a bit cynical, you could say you're sort of in tatters, but it was a very complex thing that they were trying to do, and good on him for brushing himself off after a bit of time away and giving something else a crack. So mid-2003, early-ish 2003, things start coming together. Iron ore at this point in time is trading at US $30 a ton. It's not even indexed. not traded remotely transparently at all. Mark Caruso, who was the guy who facilitated Twiggy's entry into Allied Mining and Processing, which became Fortescue, called iron ore sewage shit. So that just gives you a bit of a flavour for the time we're in. It's not the ultimate cash cow that iron ore would become for Fortescue and for Australia. So Allied host this EGM at the Celtic Club here in West Perth. And this sort of part of the story I find has a bit of sort of lore to it. He gives his first presentation. It's the EGM presentation where they're voting on him getting his big stake in the company. They are voting on the changing of the name of the business and all these sorts of things. So it's his maiden public presentation, and I think it's sort of 13 odd pages. You can find it in black and white, big bold letters, and the ambition is clear as day. So Fortescue Metal Group is the new name. It's named after the river that runs through the heart of the Eastern Pilbara region. And he forecasts that from 2003 to 2007, the iron ore market is going to see demand jump from 480 million tonnes per annum to 700 million tonnes per annum. Now, that is an astounding growth rate over a 4-year period, if you can believe it. And to the supply side of the story, he forecasts that cannot be met, that there's going to be an 80 million tonne per annum shortfall in the supply, and that is the opportunity that Fortescue is going to seize upon.
So he's taken this is an EGM. A company called Allied is renaming or rebranding as Fortescue or FMG Limited.
Yeah, flicking out the gold that they had, focusing in on iron ore.
But how did he actually manage to get control of this vehicle in the first place? Like, how did all of that? How did he pop in there?
So the guy I mentioned, Mark Caruso, facilitated this. He was sort of running the company beforehand, and what he kind of does is Twiggy has this group called the Metal Group. That's his sort of personal company. And in April of that year, 2003, he'd come to this agreement with Caruso, essentially. And this would be facilitating the acquisition of a bunch of sort of iron ore interests that the Metal Group had for blending purposes, in quotation marks. That's all just shareholder justification. Like we can sort of see through that, right? This is
parachuting a tremendous salesman with a vision.
They are parachuting someone in who is a proven, talent when it comes to salesmanship. It's just shareholder justification, and how it plays out in a sort of fiscal sense is Twiggy gets 5 million shares for free up front, gets 5 million options for free. They are exercisable at 8 cents.
Right.
Now, there's this sort of executive agreement, and it's all subject to shareholder approval, but that's not it. There's a heap of options that come in, and this is famously how Twiggy gets his enormous stake in the project. He gets 100 million options, all exercisable at 8 cents. Now, that 100 million is chopped up into 4 lots of 25, and the key conditions there are getting the share price up, getting it up to 10 cents, 15 cents, 20 cents, 25 cents. So it's just got to maintain a threshold over those levels for, I think, a 10-day period, and he gets his stake. So by 2005, he would own about 47% of the company.
Wow. And
that's how that all came about. And Caruso sort of said to this point, I had to incentivize the man. So it kind of, he also added to that Forrest wanted much more than the 110 million shares he ended up getting, and that was just sort of part of the negotiation. The market started lapping it up straight away. I mean, from April through to July, when that presentation is given, the stock goes from like 10 cents to mid-20s. It is a super thinly traded thing. It is, had a minuscule market cap, so don't read into that too much. But that is how that all kind of came about. And I think it's worth kind of adding a few more thoughts on that, because I think, we've both read a lot of stories about how companies get founded and stuff. And like in my mind, this is just the West Perth way of a company kind of getting founded. This is the West Perth way of, someone in Silicon Valley going into their garage and starting a company. The founder wants to have control of the vehicle. The company had no value really beyond.
You can't IPO with no asset either. So like that's the
the value is being a listed entity.
Yeah,
that is all. I mean, they claim to have 1 billion tons of iron ore, which was just it wasn't worth the paper it was kind of written on in the end. But that is how these sort of things come about. And Twiggy got that all for free, right? He ended up tipping in a bit more than $8 million to exercise the 100 million options. But at that point in time, you know,
Oh, well in the money.
he had generational paper wealth.
Right. But even just like the fortuitous nature of like the vision from Daydot when he comes into the company, it's like clear, it's salient, it's probably contrarian at that point in time, or at least to the extent that he's forecasting it. And with the passage of time, he might have even been kind of underestimating what the dynamics would be in that iron ore market. But he saw it. Like, did he?
Yeah, 100%. I don't think many people would accuse him of underestimating
Yeah.
too many things. But you're dead right. They come out with this vision. They want to build a mine. They would want to build a 400-kilometre railway. They want to build a port. They give it a rough thumbs up and say it's going to cost $2 to $3 billion. Importantly, they really emphasise that they are going to be a multi-user infrastructure developer. They are going to build, i.e. a railway, that other people can use, and they constantly go at BHP for not letting anyone else use their things. So they name projects here. They name Hope Downs, which hadn't been developed at this point in time, and it's in the same sort of ballpark in the kind of east of the Pilbara there. And they say that is a project who would benefit from this shared infrastructure. And, we're talking about a point in time where Gina didn't have a mine in the early 2000s here, but that one never kind of comes to fruition. But they're trying different things. They're trying a lot of different things.
It's kind of crazy because of that. But they didn't have a project. They didn't have money. They didn't. There's nothing there yet. But we're gonna solve the infrastructure, the mine, the project, the tenements, the buyer, all of that, without having anything yet.
Yeah,
it's kind of a
the first thing they do.
Remarkable vision.
Yeah, and the first thing they do to that point is they build the team. They build a great team. They bring in the likes of Graham Rowley, Alan Watling, Chris Catlow, and Phil Kirk-Lechner, all with Rio experience. And then they also bring in Russell Scrimshaw, Herb Elliott, one of the greatest Australian runners of all time, Seb Cohen, Chris Linegaard, and Ken Ambrest. A bunch of them sort of fill out the board as well as other roles within the business. So you've got this crazy ambitious leader who's convinced them all to come on this journey against the better judgment for a lot of them. They've hunted down experienced as well as just energetic people that are keen, and they're filling out the different roles: rail, port, geology, metallurgy, marketing, finance. They are, hiring for specific needs. They've got a conceptual kind of goal, and now they're just getting after it. And that is the plan. And that's what you see in that kind of ambitious and elegant presentation they put forward in 2003. They've also finished that quarter with about $1 million in the bank. So to your point, very, very small, but the ambition isn't restrained by the market size at that point in time. And they want to start construction by early 2004 on the railway, which is, very, very ambitious to say the least. So
wow. So obviously BHP, like the landscape of iron ore at this point in time, the likes of BHP and Rio, they've got the good stuff. Like there surely can't be that much opportunity to actually pick up like appropriate iron ore.
Yeah, I mean it's a super valid question. One of the elements that had really excited Twiggy and the rest of the team there is that they'd caught wind that the majors had barely done any exploration. They thought they had all the good stuff, and they had so much of it they didn't feel the need to. There was also, I'll go into the geology in more detail in a moment, but there was a lot of sort of thinking in the Pilbara and assumed knowledge that didn't prove to be all that kind of true, that Fortescue would repeatedly kind of counter, and they would try different things. So, for example, the deposits, they always thought they were these deep things that would sit close to outcrop. That didn't prove to be true, and they challenged that, and it came up with the goods in time. So looking at the projects they have at this point in time, you've got Mount Nicholas. That was the first real hope, and that was where Twiggy pulls out this map. He circles around Mount Nicholas. He draws this snaking line, which is the railway to the port, and that's the ambition. That's the 400-kilometre rail line, and that's where they want to get the ore from. And then they start testing that, and they realise it's complete crap. So,
in what sense the deposit?
I mean, they sort of talk about the stuff being high 40%.
Right.
It's riddled with shale.
Yeah.
No good. They look at another project called Mount Lewin, and they sort of hit low-grade supergene mineralisation there, interbedded again with this sort of thick shale, which is hard to beneficiate. It's no good. But there are some pockets of hope in there, which I'll get into, and it kind of gets the technical team thinking, and they, like you say, they know the majors, BHP and Rio, have a lot of the good projects, a lot of the good land tied up, but they just get super aggressive in pegging tenements everywhere. They're a bit cheeky as well. They chase after BHP in some cases on tenements that have been kind of underworked, and they call that out, and they sort of snap them up. As soon as other tenements become free, they just gobble them up. So they're very aggressive about picking up as many tenements and just building that land holding. And they are incredibly aggressive with drilling. They spend more money on drilling than any other listed Australian company over that period. So they just go super hard at that footy from 2003 to about 2005 before they cotton on to what really works.
The tenements that would ultimately come to become their first project, like at what point did they manage to pick them up?
I would say they picked them up late 03, early 04.
Yeah.
When they cotton on to what's working is mid 2004.
Yeah. The story behind how they picked up those tenements, have you heard that one before?
Do you have a story to share?
I heard that, this is just one of the biggest oversights of a major. It was BHP's like tenure. They let it drop because there was like one exploration manager or something who was under pressure to kind of cut costs and thought these aren't going to be in the mine plan for 40 odd years, and all of that is true, but what's not factored into that is a consideration for allowing the possibility of a new competitor like entering the arena. It's their own fault for it.
How good is that?
Yeah.
That's so good. So the thinking in simple terms had been prove up 1 billion tonnes at roughly 50 million tonnes per annum over 20 years. You can justify the infrastructure spend. That's sort of rule of thumb type thinking about how they're going about this. They signed another JV with this group called Consmin, who actually own Woody, and they have the Mindy project. That proves to be a bit of a dead end, but again, it helps them garner a bit of attention and also helps the geologists on this sort of journey to finding those economic projects. And they just, in that Chichester Range part of the world, keep snapping up tenements all along the way.
All of this talk about the multi-user infrastructure, did they ever get close to doing a deal with Gina?
No, I don't think Gina had any interest in ever doing a deal with them. So Gina at that point in time was looking to do a deal with Kumba. So Anglo's backed Kumba, which is a South African iron ore miner. And I don't think it ever got close, but Hope Downs needed rail. They ended up doing that big deal in 2005 with Rio Tinto. Although Twiggy did kind of antagonise Gina by hiring her son, John, who worked for the company for a period of time, 2004 odd. What
else sticks out from those early days?
Mate, there's one theme that you see from 2003 onwards, and it doesn't stop for a long time. The regulator is onto their case straight away. They get more price queries than you can possibly imagine. It seems like every other month there's another price query. In the first instance, regarding that presentation we showed earlier, ASIC is asking, why are you using non-JORC compliant resources? Does Hancock even know you've mentioned their name with regards to Hope Downs? Where have you sort of pulled these cost figures, these development timelines from? Do you have the funding capability? There are so many questions they have about that, and you kind of get the picture. I won't sort of name them throughout the story, but there are so many price queries. The stock jumps 20, 30, 40%, peels back. And there's so much happening as well that it catches the eye of ASIC, and there's the sort of promotional flavour to it all. But yeah, that is a theme that sticks for the majority of the story we're going to talk about today.
Yeah, that's an interesting reflection. I mean, I'm not surprised because there's this big and bold talk that is far further out than what seems possible by any stretch of the imagination. But the ability to kind of talk so far ahead enabled them to maybe attract enough market size to eventually get a financing way.
Yeah, it's one of the parts of being a public company. Yeah. So that kind of takes us to chapter 2 of this story in a way. And it's kind of hard to determine at this point in time what is the most pressing job, but I think pretty close to that, top of the list there would be finding a proper resource. They start working on a whole bunch of different fronts, but they need to be aggressive on this punt. So like I said, the tenement package, within sort of 9 months, within 3 quarters, that lifts 25-fold. So they're just gobbling up land left, right and centre. They come out with this scoping study, which again is crazy to think about because they don't even have a legitimate project in terms of the ore, but they talk about 20 million tonnes per annum, $1.5 billion capex, 850 million MPV. That's not going to pass muster. That's not going to attract anyone. And there's this interesting sort of conversation that takes place between Alan Watling, who becomes the COO, and Andrew Forrest. So he's chatting with Twiggy and he asks the question, what is the size that sort of gets this up? And he sort of is thinking, maybe 15 million tonnes per annum. That is not of sufficient scale. And, that is not interesting to Alan, let alone sort of Twiggy here. But Alan goes on to say, if you could do 30 million tonnes per annum, maybe that's kind of doable. And of course, Twiggy just jumps at that opportunity. His eyes kind of light up. So they've got a target, and in short order, that actually lifts to 45 million tonnes per annum. That is the number that they strive for a long period of time. That is sort of critical mass that can get underwritten. They also come out with these ore specs. So we're talking about the iron content, silica, alumina, which again is just bonkers because they don't even have a project. It's like coming out with a scoping study and saying, this is what we'd like to mine. Never mind, we don't have it.
Wow.
Let's get to work.
So even just the team who is clearly like on a mad rush to try and find a suitable like deposit here, like can you just like imagine the work that they're having to do? I mean, Twiggy's clearly got it in him that we need to make this cycle. We like hurry to market as fast as possible. This window's open, so everyone's in a mad rush to try and make this window with a big bold vision. And at this stage, maybe he's got some foresight into the Chinese steel mill demand to work into it. But like the geology team, like they've just got to find a deposit out of in such a short period of time. It's kind of a remarkable.
Yeah, I mean, we are very early in that cycle. Like it is just picking up. Again, the first inklings of the wave.
Yeah,
that starts to come on very quickly.
Yeah,
and the geology team, they're less than inspired when they first come in. They think this is sort of ramshackle, the most unorganized company they've ever sort of worked at. They share the results of what happened at Mount Nicholas, and they're all terrified to kind of tell Twiggy. But they're sort of thinking in the background, and there's a few names when we crack, Cloudbreak in a moment. There's some names that deserve a lot of praise for their kind of thinking. But the company gets to this point in time in late 2003. They have the annual report, and they share the register for the first time, which is a really interesting sort of snippet. So Twiggy is, he's there. He's preaching about cracking the oligopoly, which is Vale, Rio, BHP, opening up the Pilbara. And what I love, what you see throughout, what you see in the logo, they're talking about the national interest. This is God's work that they're doing here. Look at the register here. So you can see a name, Emichrome, there. Emichrome is a company that belongs to a fellow called Ki Chi Wong. So Mr. Wong is from Sydney, put in $1 million in 2003. To this day, still owns 3% of Fortescue. By 2008, he was a billionaire. Now, this person had backed Twiggy at Anaconda, and actually find a bit about him online, sort of punted on a number of mining stocks out there. This was undoubtedly the best.
Wow.
How's that?
Wow.
The directors and management hold 66% of the company, with the vast majority of that being Andrew Forrest's holding there. And they also come out with this development timeline. So they want to go from scoping to PFS to DFS within 3 quarters all up. That wasn't actually achieved, but that is the goal that they had. They want to start construction now in 2005. And they want to be shipping ore by the end of 2006. So they are a team on a mission. To answer your question before about the rocks that they are hunting down. So, like I said, Mount Nicholas was the initial aim. That had super high levels of impurities, but there was that hope that I'd sort of hinted at that they got to. The idea is that they're testing for these thinner sheets of iron ore over much more expansive areas as opposed to these deeper deposits that Rio Tinto and BHP had mined. So the geos, Barry Knight, David Mendelowitz, and Eamon Hannon, and I'm sure there's a whole bunch more that deserve credit, as well as John Clout, who was more from a metallurgical background and had worked at the CSIRO. They are the technical team that is credited with the super original thinking that led to the breakthroughs that they had here.
And I mean, we're still talking about it's banded iron formation that they're that they are ultimately still looking for. It's not channel iron deposit or anything like that.
So they were hunting for these channel iron deposits.
Yeah.
And then they land on these bedded iron deposits, which ends up being the dominant mineralization for the vast majority of their projects, from Christmas Creek through to Cloudbreak.
So they're making some progress on the tenements, but what about the infrastructure, mate?
The infrastructure, mate, can't understate this. They were fully committed to being a multi-user infrastructure player. They came up with this plan. They wanted to create the Pilbara Investment Fund. They would later call that the TPI. Now, this would be housed separate to FMG mines, and its ambition would be to debottleneck the Pilbara. Like, this was so different. Like, Fortescue would be holding 40% interest in this, and they wanted to list this, with the idea that different investors are interested in infrastructure and mining. So what could have been? But they never sort of officially stopped thinking this way. It just kind of whittles away in the background. But for quite a couple of years there, you see them talking about this. Meanwhile, they hone in on this $1.85 billion capex number, 2/3 infra, 1/3 mining, and they chuck up in a presentation what the payback period is going to be. Rapid payback. How's that for a payback period? So they're iterating on a lot of these things, and they've just got a number that kind of works, and it works for a couple of years. They start signing all these memorandum of intents.
Yeah, clearly the rationale behind this, PIF, Pilbara Infrastructure Fund, is just it's a seemingly insurmountable amount of capex that needs to go into this, and they're trying to presumably reduce what Fortescue themselves have to be able to fund so that they can actually get away.
Yeah, 100%. And I think they can piece in different types of investors. There's the big allocation from the junk bond market that they think they're going to get, as well as a lot of Chinese state-owned companies, particularly on the mining front as well. They would prepay. They wanted to get a lot done via prepayment and that type of thinking.
How big is the capex?
When it's all said and done, it's north of 3.
North of 3, but they're not saying it's going to be 3 at this stage.
They don't know it's going to be 3 at this stage. Yeah.
Oh, amazing.
So they start signing all these memorandum of intents. That is, according to some people in the market, not worth the paper it's written on, or, the equivalent of toilet paper, as someone else sort of said at that point in time. But there is interest from the steel mills, because the steel mills want to crack the oligopoly as well. They don't want to be beholden to the 3 major companies who they seriously worried about having pricing control. So Russell Scrimshaw and David Liu, those 2 deserve a lot of praise for just going over to China. They didn't even have any ore to sell, but they just hung around in the lobby. They took every meeting they could kind of get. They, signed every half-decent deal they could to just start generating some interest. And bit by bit, it started coming together. And when they start announcing these, there's this, going through the announcements, there's a bit of language that really sort of stood out to me. I kind of love it. FMG will continue to relentlessly progress this project. So
at this stage, what is the project, by the way?
The project is loosely that they are going to mine something in the Eastern Pilbara. There's going to be a big railway and a port.
So
don't doubt it.
We don't know what the project is yet. Okay.
Nah.
It's that's remarkable. You go to China, you're getting a bunch of like commitments from steel mills. Not I know it's an MOU, but it helps you progress things. I'm pretty sure the dynamic for those steel mills as well, what they needed for themselves in order to be able to borrow from the state bank and whatnot was a signed indication that they had supply commitment coming through. So everyone was incentivized here to make this work.
Yeah, a lot of smaller steel mills were popping up at this point in time. You had the big ones, but then
they need supply. If you just sign something, and I think the prepay, which ultimately comes to fruition, is part of the incentive of the steel mill that made that all happen, was their own internal financing dynamics.
They were hungry. They were super hungry for supply. They actually get another speeding ticket around this time, which is worth mentioning because it kind of happens in the lead up to the team flying to China to sign these agreements. Graham Rowley, one of the directors, buys a bit of stock. Then they sign these agreements. The very first ones, the stock ticks up sort of like, I think it was 40-odd%. And that lands them in a bit of hot water with ASIC. That one sort of blows over. I think it was, there was no kind of malintent there. they are sort of really, really buying into the project, the directors and the team and everything. And there's lots of announcements. Things are happening very quickly at this point in time.
Where's iron ore price at?
So this is something else to kind of wrap your head around back then. Iron ore was priced in benchmarks, so very similar to TCRCs in copper today. A price would come out at the beginning of April because that lined up with the Japanese financial year, and that would be the iron ore price for the year. So very different to today.
Wow.
You'd have a major producer and a major steel mill, say, Bow Steel and Vale would get together, and that would set the price for the whole market. You see it in zinc TCRCs today. It was the sort of way of doing business back then, and obviously things changed. In 2010 is when that kind of changed, but iron ore in 2004 specifically jumped up about 20%, and Chinese iron ore demand had been growing at 16% for the previous 10 years. So that's a rapid clip to be growing at.
Big time.
Yeah. There's one other thing I'll mention at this point in time, and I won't touch on it again throughout the story, but FMG are constantly trying to get access to BHP's rail. You see these legal letters coming out all the time, and it ends up being not the right kind of thing to chase after, and they end up just wasting a little bit of time in hindsight. Why they were doing it is clear, to chop down that infrastructure spend, and they were arguing that third parties should be able to use these private bits of rail as they were national infrastructure, but BHP was never ever going to allow that, and it just ends up being a big win for the lawyers over a number of years.
So they've got to build their own rail. I suppose they've got to find a deposit that actually is usable too.
They have to find a deposit, and this is where mid-2004 they cracked the understanding of the Manoeuvring iron formation, what they're really focusing on. So we mentioned the CIDs, the channel iron deposits, they thought would be the dominant mineralization. Didn't prove to be the case. The bedded iron deposits are what ends up being the sort of pay dirt for them. So these are stratiform hosted in ancient iron-rich marine sediments, so kind of old oceans. And these are hosted in the Namundi member at the base of the Manoeuvring iron formation. So we'll sort of show a map and you can have an understanding of what the Pilbara looks like. But this was unique thinking. And it turned out to be a win for them because these deposits, like I mentioned, were different. Pros and cons to it, but on the positives, they were larger, they were a bit more consistent, and they could potentially be easier to mine with a different mining method. On the downside, they were lower grade and could be higher in impurities, so it wasn't completely a win-win. But you can see through that 2004 period, the thinking is really evolving, and they really sort of knuckle down to what works. So I think May 2004 is when they first mentioned these very flat-lying deposits, and like that was just counter to all the assumptions that BHP and Rio had. So in June 2004, they discover Cloudbreak. That is an enormous moment in time for the company, like a really, really big moment. It actually takes a while from when they discover it for that deposit to become, or that area kind of to become the priority for the company. And the reason why, beyond the geology, is that it sits 60 kilometres closer than Christmas Creek, and even closer than Mount Nicholas to the port. So
Gotcha.
Much less rail will be needed if they can prove that up.
Gotcha.
The Geo team there named it after a wave in Fiji. I know next to nothing about surfing, but I like the idea that the Geo team there had sort of free reign to do their thing. And
Cloudbreak.
Yeah. And
is a mineralization at surface? Is that how to think of it?
So think kind of 10 to 35 odd meters of overburden.
Okay. Yeah.
That's what you're kind of working with over large kind of swaths. So it's not that thick. It ranges from like a few meters in parts to kind of 20 meters in thickness.
Yeah.
But 800 to 2 kilometers wide in pockets, and 30 kilometers of strike. So long, flat-lying sheets. Now those sort of numbers I just mentioned were for Cloudbreak. Christmas Creek, which is think of it kind of like just to the southeast of Cloudbreak, and what ends up being the second mine and gets hooked up a touch later on, not too much later on. That has a strike length of about 20 kilometers, 500 kind of meters wide, thicknesses up to 35 meters. So you can kind of mentally visualize what these deposits look like, and you can see on the diagrams that these are kind of compressed in because these things are quite long in nature.
I follow. How about the metallurgy? Like,
the met goes hand in hand with the geological understanding. So at this point in time, they mention that this type of ore requires little processing, which had always been the goal. You know, you want this to be a logistical operation. Twiggy is petrified of anything that has complexity to it in the processing sense. So they, at this point in time, herald the identification of direct chipping ore and a whole bunch of it at Christmas Creek, because they've cottoned on to what they started to realize earlier, that the presence of this microplaty hematite, which, you know, I'm not a met, I read a lot about to try and understand, and John Clout, the Met, spoke a lot about it and wrote a fascinating paper on it. But the DSO ore had this in abundance, and the steel mills really liked this because of its sintering qualities. That would improve the value in use. Ultimately, it'd make the rock that they have more valuable for Fortescue. And Twiggy dubbed it the holy grail of iron ore in the Pilbara. They even plastered it over their 2004 annual report.
the holy grail of iron ore. Don't just forget the grade, but everything else.
Mate, look at the cover of the annual report 2004, and what you can sort of see in the background is the crystalline structure of it. So they were really, you know, thinking this is a big deal, and the industry hadn't thought the Chichester Range would be prospective for this. It was a poorly understood area that hadn't really been drilled since the 70s. So
you'd have all of the incumbent iron ore geologists that are working at BHP and Rio kind of thinking these guys are crazy.
Yeah, I'm sure that wouldn't be the only time people thought they were kind of crazy. But there you kind of go. So to capture where we're at this moment in time, they found these ore bodies, not the highest grade in the world, potentially easy to mine and process, potentially got the right sort of specs to them, and you start to form the picture of a much more simplistic operation. This friable ore is suitable to dry processing, easily crushed fines without grinding or anything like that. Low mining cost, don't need to drill and blast, which we'll get into later. Lower processing cost, less penalties, that doesn't turn out to be massively true, and a lower capex, still decent sized capex, but the capex is very much weighted to the logistics, not to the processing here. So
what is the grade of this at this point in time?
What they start delineating is a lot of ore at 58-ish% with high grade pockets of 60%, plus or minus a few decimal places.
So they're talking about DSOing 58%-ish grade without beneficiation. There's no market for that yet, right? Like that's not what Rio or BHP are exporting. Like it's Vale's beneficiating themselves. I
think iron ore is very nuanced, and the steel mills look for a number of different characteristics, and kind of what we spoke about with aluminium now, it's the same with bauxite in that case. Like they will take a bunch of different ores, and they will sort of blend it all together. So they have 15% that, 10% this, 25% that, and they'll piece it all together. So they start working, hand in hand with the steel mills to find a product that is achievable for them and is acceptable for the steel mills. And that fast sintering speed that the ore has becomes an attractive characteristic that the mills want. All this at a point in time, the company's still kept at $55 million.
Wow, is that all?
Yeah, this is mid-2004.
$55 million.
Yeah, but I think you can sort of say that they've cracked the code geologically. The PFS has just been kind of altered on the fly. They start coming out with resources now, so things are chipping away on that front. Christmas Creek is the priority. They come out with this quarterly, and characteristic bit of spin here. So funny. One of the highest points for those listening is brokers commence positive coverage. Now, at this point in time, they're there was one broker covering them
Yeah.
who'd done the raise for them earlier that year.
Yeah.
So-
But there's something to be said about what will ultimately come about from that financing perspective, because there's one thing that's true of Perth brokers. It's like if you lose someone money, like the brokers, they're just not going to back you again. So he would have been so out of favour for any of the Perth brokers that had kind of followed him in. So he was into Anaconda. So I can understand why it might have been difficult in those early years to get the Perth brokers on board, but he wouldn't need them.
Yeah, I think you're right. And even in the Anaconda days, he didn't do the traditional route for a couple of reasons. He wanted to minimise dilution, and people didn't want to back the project. They didn't think it'd work. So I think the whole kind of Andrew Forrest story has never been filled with universal backing of the Perth brokerage community, which is in itself wild because the rest of Australia, the East Coast, considers Perth brokerage community a bit wild and high on the risk sort of tolerance spectrum. They keep chipping away on multiple fronts now, and they start to sign those prepayments that you mentioned earlier. So Hebe come in for $10 million. You start seeing all this sort of stuff that even 1 year earlier would have been just bonkers, right?
And so these steel mills are given $10 million up front for a
No, there's always strings attached.
Yeah.
So another one signed a week later, and how they structure it, that one's a $28 million prepayment.
Yeah.
But think of like half of it will be payable when construction starts, half of it on first shipment type of thing. So it's not as helpful as it sounds. It's not cash in their pocket right now.
It's still a substantial financial commitment given the stage of the actual progress at that point in time.
Totally. So one of those steel mills that signed a contract is Fengley. Along with the $28 million conditional prepayment, they make a $7 million equity investment. Now, they do that at a 50% premium to the closing share price before. So they do that at $1 a share.
Wow.
So Wu Yuming's, this Fengley group was just a small steel mill on the outskirts, not a state-backed entity. That stake he bought became worth $700 million in 4 years.
You don't think that when you're paying a 50% premium?
Yeah. No. Wrap your head around that. They then come out with this announcement in late 2004, which like barely believable. You can't quite believe it. It is looking as if sort of every Christmas has come at once for the team, as if it's all fallen into place. They announced that China Harbour, China Rail, and China Metallurgy, 3 separate state-owned entities from China, have signed binding agreements to both construct and finance the whole project. They, will see that FMG pays less than 10% of the $1.85 billion upfront to build this massive logistical and mining operation. That is just staggering.
That's crazy.
The idea that Andrew Forrest had convinced another company to not only build but use their balance sheet to finance the thing is just amazing. But there's a bit more detail that comes out on this one later on, so we'll touch on that.
In the form of a prepay.
They would pay for it, and then Fortescue would pay them once
in volumes.
Once it's all. It wasn't totally clear. The idea was that they would pay them once it's done and partly through prepayments as well. So
it's still like no. Yeah, what a non-dilutive way to fund a tremendously enormous capex for a very small company.
Yeah, there's a few twists and turns along the way in that one, but they need to get things approved first. So they're kind of putting the cart before the horse in a few ways. But thanks to some fantastic lobbying help, they get this thing called a state agreement. And a state agreement in WA is fantastic because it kind of clears the path for all your various forms of approvals. Because, if you actually think about what they're doing, you need to check off a bunch of different things. So this gives you a clear passage to kind of do it. And they did this through the help of Brian Burke and Julian Grill, who some of the older money miners out there might know for their presence in WA in the heady times of the 1980s. Now, this was a big deal that caused a lot of controversy amongst politicians. Some politicians are thinking, hey, why the hell are we back in this project, getting behind this? It was done right at the end of 2004. They were very opportunistic about how they were cunning in how they got it away. And you've also got BHP and Rio Tinto who are a bit pissed off because they're now thinking, hey, the government, are prioritising this upstart over projects that are actually going to get up and running, that are actually going to, lend more to your taxpayer coffers and royalty payments and so on. So, yeah, you've managed to upset a lot of people. And even funnier, Burke and Grill thought that they had negotiated a success fee to get this away, to get this big bit of work away. Now, Twiggy was of the view that they had negotiated a success fee to get the state agreement, as well as to get Hope Downs tied in with what they were trying to do. And they wanted to get paid that success fee in stock. The stock from this point jumps from late 2004 to early 2005 from 60 cents to $3. So these guys are very pissed off now that they haven't got paid in stock, and that stock, went on to 5x. So it was too bad for them. FMG had their agreement. They were on their way to getting expedited approvals, and they were off to the races.
Unreal. Bit of lobbying goes a long way when you...
Goes a long way, mate.
Yeah. So chapter 4, mate, 2005 comes.
That is right. So 2005 starts with a heap of buzz, and it ends up being a incredibly testing part of the company's history. Iron ore jumps 71%.
Oh my God.
This is a bulk. Like 71% is crazy. That's the largest price rise in iron ore's history.
The animal spirits, the commodity animal spirits are out.
Steel mills are hungry. And the market cap of the company surges through $1 billion. FMG enters the ASX 300, then onto the 200. Andrew Forrest on paper is very wealthy, exercises the end of his sort of options. So he's got that all in paid up stock in the company. And just if you are thinking along to what the FMG share price is today, they would do a 1-for-10 share split in 2007.
For 10. So the $5 is like 50 cents in today's terms.
That's right.
Okay.
Yeah. So it gives you a hint of what happens on the share price front there. So they're on to the better ore. They are cracking that code. They're getting the scale. The work focuses in on Christmas Creek and Cloudbreak. They stop working at Mount Nicholas. They hit the 1 billion tonnes. Things are chipping away. And I won't mention that kind of too much more because that just keeps growing in the background. They prove out the deposits. They spend huge amounts on exploration to get it there. The grades don't end up being what we'd kind of hinted at before, but because of the qualities, it kind of works. And they get a very good idea of where the railway is going to go. They've already hooked in on Anderson Point. They did that actually very early in the piece, which is going to be where the terminal is built in Port Hedland. So things are all happening on that front.
Is it, like, in terms of just the certainty of this financing and everything, like at the point that you get the Chinese kind of prepay there, is there kind of like a mentality of FID is already kind of here, so we're just building it already, but I'm sure there's still parts of this CapEx that still are unfunded. Like, what's the thinking from a project execution perspective and spending? Like,
so the market is more or less convinced that things are happening. Pockets of the market are convinced that this is happening. But then you get to March 2005, and I'll tie this all up and call it the China financing debacle, because it is a true disaster what kind of happens here. So you have these 3 state-owned entities who have agreed to pay for everything, agreed to build it, construct the whole thing. This comes to a screeching halt. They're no longer happy. So China Met is fronting the group, the 3 of them, and they say they're no longer prepared to back that agreement we'd signed with you in sort of November, October 2004, at least on the terms that it was kind of indicated. They wanted equity in the project. Now, what they were doing was taking a very big risk. So it's kind of understandable they wanted equity, despite that not being in the original agreement as the market knew it. And it kind of throws open the question, what is this binding agreement that you've actually signed with this Chinese counterparty? It throws open another question. What good is a binding agreement with a Chinese counterparty if they don't want to do it anymore? So
it's not very good because
yeah.
you're not going to be able to enforce that in Chinese course.
Exactly. So to counter the market fallout, FMG publicly share the agreement. It turns out this is just a few pages and it's titled Framework Agreement. It stipulates the parties will work together towards a more fuller and detailed agreement later on. So the Chinese group indicate they are not willing to pursue this unless they acquire a majority interest, equity interest in the project. It's sort of reported that they would happily take 80 to 90% of the project and free carry FMG, which, wasn't considered for a moment by Fortescue. But it's kind of interesting to think about because at this point in time, that would seriously minimize the amount of cash flow and the value of the stake in the business. But it would be a very de-risked way for Andrew Forrest to make a lot of money for himself. But like I said, that was never considered for a moment. They explored potentially selling down 15 to 25%. That didn't end up eventuating. So yeah, you get a whole host of questions being thrown up at this point in time, and the market is questioning, hey, what else is there a bit of spin on? As well as that, they need to go back to the drawing board and finance this whole thing. So the whole debacle leaves them with a fair bit of egg on their face.
I wonder if the equity kind of component of all of this, I wonder if like part of the strategic national interest of China is coming to fruition there as it is. Like if you're a JV partner and you require mutual consent to do things, and all of a sudden you got a lot more sway in the project than you would as just the lender.
Yeah, I think you're right. We always speak about how strategic they are and how long term they are in their thinking. So it wouldn't surprise me if that was the mindset back then as well. The market reaction though to FMG and its sort of stock is it's not great. The stock had 10x'd from when the first agreements came out with the Chinese to March when this falls apart. The stock then drops 40% in a very short matter of time, in about a week, I think. So it goes from 550 down to 330. There's another actually hilariously embarrassing bit of news that comes out. One of those prepayments, it's revealed that it can be paid in cash or equivalent. So the steel mill says, we don't have the cash, but we can pay you in steel plates. So
Wow.
Again, just how that was kind of misconstrued to the market raises a few questions.
Doesn't it?
In hindsight, it's funny.
Oh, that's very funny.
So on top of that, there's some more negative news. There is a CapEx warning that CapEx is going to blow out, and Twiggy is going around Australia, going around the world, convincing people that number is not going to start with a 3, it's going to start with a 2, as opposed to the 1.85 it had previously come out as. So to buffer that and, kind of warm up shareholders a bit, the iron ore price has massively risen since they first came out with that 1.85 number. So they're kind of trying to compensate and say, hey, revenues are going to be substantially up on what we said as well.
But they're not a $1 billion company anymore. They're like...
No, they'd be in the...
600s?
In that sort of range.
$600 million company that needs to fund $3 billion of CapEx, and your source of funding is just vanished. So it's a challenge.
It is. They've got a bit of financing at that point in time to see them through. But yeah, there's a few other sort of curveballs that come their way. They reveal that their product's going to be sold at a 5% discount to Rio's high quality stuff. That doesn't happen. They acknowledge that
it doesn't happen because
their ore's lower quality.
Yeah. When you say it doesn't happen, it's like it's actually more than a 5% discount that it sells at?
Much more.
Yeah.
Much more. Yeah. They acknowledge that Q4 2006 isn't going to be achievable. It's going to be pushed to Q2 2007.
Mm-hmm.
They guide to a 22-month timeline. And they do, for the first time, hone in on Cloudbreak being the project hub. This means 260 kilometres of rail, not 400. So that's a win. They raise a bit of money as well.
Equity?
No.
Debt.
Con notes.
Con notes.
Con notes. So first up 40 million Aussie and then US 50 million. Now, that US 50 million con note, I have to go on a bit of a tangent because it's fascinating. It's with a group called Habit, who seeds a hedge fund called Harbinger Capital. Harbinger is run by a fellow called Phil Falcone. Now, he would become one of the highest earning hedge fund managers in the world. He'd become a billionaire. He'd make, I think, a couple $1 billion shorting subprime mortgages. He would make a couple $1 billion on Fortescue, I believe. He would amass a 16% roughly stake in Fortescue. He was familiar with Twiggy. He'd backed him at Anaconda as well, actually. And yeah, at the kind of height of the financial crisis, he was the bee's knees. He was going around New York, bought a $50 million US house, like a house in New York. he's feeling himself to say the least. But his story is an interesting one, and it goes a bit pear-shaped. Firstly, 2008 ends up being quite a poor year, like it does for most people, so that's not too much of a knock. But he ends up getting accused of using $110 million from client funds out of the fund to pay taxes, and then gets accused of market manipulation, which he confesses to, or gets proven guilty of, at least, and gets banned from the industry and later declares bankruptcy. So
Wow.
it was
Fall from grace.
it was a bit of a fall from grace, you could say.
Bit of a fall from grace.
But an interesting story, nevertheless.
It is, yeah, 2008. Now, a part of the story that we kind of haven't talked about yet was, I mean, to build a giant 260-kilometre rail and a big bloody iron ore mine in the Pilbara, you're going to have to like negotiate with the traditional owners. Like, what were those like land access negotiations like for Fortescue?
Absolutely right. So in late 2005, they come out with their first land access agreements. So the first one is signed with the Nyanyapali people. Their area covers 80% of what was initially going to be mined. It doesn't prove out to be that way, but it's followed up with agreements with the Paliku and the Kariyara people. The Kariyara people's land is most of the infrastructure, and the Paliku is where they're going to mine, where you can see on the map there. So this wasn't without its controversy. The initial agreement was reportedly signed with 6 elders who had broken away from the broader group, and there was, or there still is, differences in opinion over the presence of lawyers. You know, some saying that was agreed upon, that there wouldn't be lawyers for the final signing, and so on. So, yeah, that ends up coming together. I think there's a much more controversial component with the agreements with the Yindjibarni people. That was for Solomon. That would happen in this kind of time frame, but that isn't the sort of part of the story that we're focusing on. You can see sort of parts of those discussions on YouTube out there. But I think to round out on the point, like Twiggy's views on providing Indigenous Australians with work as opposed to welfare payments, you know, he's relatively outspoken on those components, and you can see them just with a quick kind of search. His method would always kind of be awarding contracts to certain businesses and so on. I think everyone listening would have their own views, and you know, you can sort of debate what is fair and what's the right approach. And separating native title groups is, you know, certainly a controversial way of going about it. But by late 2005, they have sort of in principle agreed with all the relevant native title holders to get the projects built, specifically for Cloudbreak and Christmas Creek, to have it get together to then line up with the rest of the approvals that they have.
That's a big, you know, a big unlock. If they now have a pathway to building it, I suppose they need to figure out how they're going to mine it and get real funding in place.
Yeah, totally. I went down a real rabbit hole learning about this. I found it fascinating because almost on every front they're trying to do something different. They're kind of forced to do something different to be cost competitive. So I found it really interesting. Firstly, on the mining front, remember we're talking about flat-lying, thin, shallow deposits. So strip mining conceptually makes sense for that. Think coal mining, although coal is a very different material to iron ore. So conceptually it works, and it would be a big sort of cost-saving front if they wouldn't have to go the drill and blast route, at least not initially. So excavators and trucks would be used to remove the overburden that would be replaced into mined out panels later on. Once you've got it exposed, you'd have these continuous miners that would kind of chew up strips 2.5 meters wide, sort of foot deep type things, and spit it out into a truck on the other end, and you'd mine 6 different kind of areas at the same time. You'd have a number of these strip miners working.
These are they're giant surface miners. Is like how to think of them, right? And
yeah,
it's the kind of equipment that it's used on like the salt lakes of the Atacama brines and those kind of things.
We'll show a photo. The ones they start with, the Verton 2500, beautiful little beast. They're relatively small actually. Like I said, 2.5 meters by a foot deep that they're chewing up and spitting out. So you can see there what it looks like. They then migrate to the Verton 2400, which is a bigger beast. But it was a novel approach in more ways than one, because you know, the surface miners, if you think of them, they've got these kind of picks on them. They need to rip it up, and these picks were just getting completely thrashed. So they ended up kind of engineering their own picks that they would then build in China and sort of fit them onto onto their surface miners to get the job done. But
Mate, like, if you've never seen one of these things, and I suppose most people would, but it's literally like a big lawnmower. Like, it's remarkable. Anyway.
it was another sort of area in which people could kind of mock them and their approach and saying it wasn't going to work. But
Yeah.
there were plenty of benefits from what they were doing. You could be more selective. You could then,
Importantly, lower CapEx startup.
yeah, absolutely. And then you've got, selective kind of grade control. It's better for that. Blending purposes, cheaper, less explosives. You don't need to do the big sort of primary crushing component to it. Smoother areas for the trucks to drive on. So, truck tires are a big cost for an operation. All these things, like, yes, there's a productivity downside to it as well because it's smaller in nature, but I love the creativity, yeah. And it didn't kind of end there. On the processing front, they incorporated this desanding capability. So this would lower the alumina and the silica levels by removing these sort of fine clays and bits of shale that they had in the ore there to meet the customer specs. Like, the uniqueness of what they're doing here is, having to create this product from scratch. It's not a marketable product to the steel mills, like we said before. So they're having to work with them, and they did a lot of work with this university in China that would work with the steel mills to get it done there.
What about on the rail front?
Kind of think rail is rail. What can you kind of do differently there? They come out with these sort of 40-ton axle loads. They are the heaviest in the world, some say, and FMG designed these smaller wagons, a bit of a lower center of gravity. The ultimate length was very similar, 2.5 kilometers. Massive, beasts when they're towing along, like roughly 32,000 tons of material. And they really pulled in the time frame to build this. That was a cost saving in and of itself.
Were there any kind of like decisions to minimize capex as part of that actual like rail? Was it like a different dimension kind of rail to it?
Yeah, I mean, one of the things they did was try and build in BHP's corridor. So that corridor had sort of been made already by BHP, so they would save capex on that front. The cart turning machines as well were relatively novel and newer, so they would sort of be more time effective when the ore came to Port Hedland and would be flipped and chucked into the rehandling facility.
Yeah. The civils involved in rail is like, I always underestimate it in my head because you need the rail to be so flat as opposed to, and so there's so much earth moving involved.
It's an expensive operation to build a rail line, that's for sure. So 2006, I sort of think of this as tying up a lot of the kind of loose ends. Permits, studies, approvals, contracts, they're all coming in. Mining, haulage, logistics, that's all kind of coming together. But you've got the one big obvious thing. They need $2.5 billion.
Where's the money?
So remember, Fortescue at this point in time is kept at $1.4 billion. They need $2.5 billion. The Aussie dollar is starting to do some really strong things. It gets to a level that it kind of maintains or betters for the next 15 years. And FMG starts also winning over the investment banks, a bit of backing in that community, which isn't the hardest thing when there's fees up for grabs. But they do get in $200 million in a loan facility that sort of ties them through. And they start getting a bit of traction despite all the rumours that BHP and Rio are out to kill them and pressuring banks and analysts from covering them and all that sort of stuff.
Have they actually started building anything yet? No.
They're doing trial mining from
mining.
Late 2005.
Okay. And honing in that the engineering kind of technique to...
But
there's no rail construction or anything, like no ordering of long lead items or anything like that.
Long lead items start being ordered in 2006,
right,
on the back of that $200 million check.
Okay, gotcha.
This is happening one way or another.
Uh-huh.
But they get hit with some serious charges from ASIC in early 2006. Now, this is I think a consequential part of the story in the fact that like the personal toll charges would have over an individual and over the company as well, because ASIC were charging Fortescue as well as Forrest individually in relation to its disclosure on what I sort of called the China financing debacle. Now, this was almost exactly 1 year later, so they'd been investigating for 12 months. If you remember, the stock had 10x'd from the first announcements to the fallout when it revealed, they weren't all that binding. or as that was sort of reported by the Chinese. So the severity was increased with the fact that Forrest had sold $13 million of stock in early 2005 after he'd exercised a bunch of options. So on the back of that, ASIC were contemplating insider trading charges as well, and they wanted to ban him from being a company director. And now this case would go on for years. FMG would vigorously fight the charges, as would Forrest. And interestingly, the market wasn't too bothered at this point in time. The stock was back over $6. But to kind of cut to the chase on what happened, Forrest firmly believed that those contracts were binding, and that's what he'd argued. And he, as well as the company, in his perspective, had done nothing wrong. So he floated the idea that this was all just a ploy from Rio and BHP and their kind of lobbying to down the company. In any case, this toils away in the background until 2009, when Forrest wins all cases, against him. However, something actually came out at that point in time. It was sort of proved that the Chinese reviewed all the wording and approved all the wording of the FMG announcements. And in big, bold letters, you can see the words binding and these sorts of things. So the Chinese had approved this. So it was complicated, and I certainly haven't read all the court docs, but you can, there's a fair bit out there. ASIC appealed the outcome, and they won in 2010. And then by 2012, this goes to the highest court in the country, and Twiggy is vindicated. He wins a clean sweep and puts it all kind of behind him, although the company was at a very interesting point in time in 2012. But thankfully, in his case, this is all sort of put behind him. And
but he's effectively going through the most sensitive period in the company's history in some respects, and he himself is under the massive microscope of the regulator.
Can't imagine what that sort of pressure would feel like.
I'm sure that the media would have been like rampant that period of time as well.
Bloody media, they're the worst. Yeah.
So I'm following so far.
Yeah, that's us in kind of mid-ish 2006. Now, they then sign an EPCM contract with Worley Parsons. Now, this one is worth stressing because I think it's a big deal. This is one of the key learnings that Twiggy had from his Anaconda days. He was of the view that the engineering group floor back then had screwed him over. He'd signed a US $1 billion fixed price contract, and that left Anaconda just in Floor's hands, utterly and totally, in his perspective. And that's kind of what you get with an EPC contract. So he claimed the bondholders and Glencore had given him no choice, and that gave the engineer the incentive to cut corners to, buffer their margin EPC contract. So he said they didn't do solid work, and that ultimately cost him his job. Now, that version of events is disputed in more than one way, but that is what he believed, and you can't argue that shaped the journey that Fortescue went on. So I found that a really interesting nugget, and just another one of those big lessons that he learned that shaped his later career.
Because all of the ingenuity and engineering kind of like that's happening to date up until this EPCM contract with Worley Parsons has been done in-house, their own engineering. I'm sure there's been like third-party consultants utilised heavily, but he's built an in-house like capability within Fortescue.
Yeah, exactly. Like even like geologists were working on those picks I talked about on the surface miners. Like, all hands on deck to kind of solve the problems.
But why sign this EPCM with Worley Parsons? You had to.
A project. Yeah. So July 2006, stock is on a tear. Iron ore jumps 20%. The long lead items are being ordered. They come out with this announcement with a group called Noble, who some people might know. I'm not sure if infamous is the right word, but they have an interesting story in the commodity trading world. I think
infamous is the right word.
Yeah. There you go, infamous. So they wanted to take a 10% equity stake for roughly US $300 million, and they wanted the majority marketing rights, which was not palatable to Fortescue, and no deal. So a week goes by, and they come out with this monumental deal. They sign a US $400 million agreement with this investment firm called Leucadia.
Tell me about Leucadia and how they structured this.
So Leucadia was a holding company. Think of Berkshire, and later, Leucadia merged with the investment bank Jefferies. That happened in 2012. So that's where they're kind of at now. But it was created by these two guys, Ian Cumming and Joe Steinberg. And it played a kind of vital role in Fortescue's history, and not always in a positive perspective. But these guys were seriously switched on investors, like seriously impressive in their track record. And I think a bit more should be written about them because I'd be keen to read it. But they grew Leucadia at 19% per annum for over 35 years. So from the 70s through to the merger with Jefferies. And their investment saw them take a board seat. And it was interesting going back to their shareholder letters and seeing what they wrote about. They were very complimentary of Andrew Forrest in his early days. I'll read a little snippet here. FMG is the creation of a hyperactive, smart, energetic Australian entrepreneur named Andrew Forrest. Imagine the Energizer Bunny. So it all starts out kind of dandy, but it doesn't end that way. And the relationship frays and ends up going to court.
They've got such like an apt synopsis of his character, which you do hear things like that repeated regularly over the course of history. Hard work and survival are in his DNA.
Not a bad thing to have written about. Yeah. It's I think you're spot on there. It's super sort of fascinating to learn more about the character from the perspective of these sort of really top quality investors. They also added that Andrew ruled the board with an iron fist, which I don't think is a surprise to anyone. Sort of said his personality dominated the board, and this is what kind of led to the relationship fraying when it comes to things like how much leverage you're going to take on, as well as expansion decisions. It was his way or the highway, and for perhaps a bit more conservative investors, that wasn't what they were in it for.
Well, they're probably also concerned with where they are in the debt stack, and I suppose you got to tell me about the instrument. That
100%, yeah. So US $300 million of that 400 is an equity investment at a $15 share price. It's a 50% premium.
He's good at that, isn't he? Getting 50% premium.
Bloody good, yeah. They took 10% of the company. Mm-hmm. Now, the remaining US $100 million is a 13-year loan. Interest payable is 4% of the revenue from Cloudbreak and Christmas Creek.
Net of royalties.
The iron ore price is nowhere near what it goes on and heads toward, which is close to $200. So by 2011, these guys have reaped US $1.8 billion in royalties and stock sales. They still own a couple $100 million of stock. And the year later, they get bought out of that debt instrument to the tune of US $700 million. It's actually a bit more than that. So what an investment.
Has it come with, did it come with security or anything like that with their...
So your point before was very sort of switched on because they got threatened to get shoved down the debt stack when Fortescue needed to refinance themselves in 2012. That was the impetus to say, let us buy you out.
Yeah.
Yeah. So...
Yeah, okay. I gotcha. Because it's like structured as a loan, but everything about that is an equity instrument to me. That's like it's a funny it's a
convertible. It's a hybrid instrument.
It's like a short-term royalty. You know what I mean? Like you're getting money up front, getting paid back for a finite period of time.
It's fantastic.
Wonderful.
Yeah. Or succulent as Ian Cumming described it later. Yeah. So Aussie investors, that showed the power of Leucadia and the person on that side of the table in that point in time. Like Fortescue needed the money and the Aussie investment community wasn't prepared to go anywhere near it. And to the point you mentioned earlier on backing sort of investors, I think this really showed the US's hunger and nature to back repeat entrepreneurs who might not have been all that successful in the first run at it. And, that was the second time after Harbinger that it had happened now. So, yeah, I think it's a sort of super interesting quirk in the story that the Aussie investment community wasn't really along for the ride. So to be clear, it's not signed and delivered. It's contingent on financial close. Fortescue need to get the rest of the money together. They need to get a minimum of US $2 billion by the end of the year for that money to come in.
Okay.
So that leads to the big one.
There's a clock ticking now.
The clock is ticking.
They've got to hit the debt markets.
Yeah, 100%. And this is where I'm going to actually play a snippet from an FMG video because I think the way they capture it is so good. But they secure $2.7 billion from a bond offering. It's just immense. There's not too many more ways you can put it. Like, I think reading all the announcements 20 years later, it's still kind of barely believable, and you still kind of doubt that they're going to get it over the line and that they're going to get this thing built and everything. But yeah, they raised $3.2 billion all in with the Leucadia money coming over the line. So 2.8-ish is in debt, 400 million Aussie in equity, less than 10% dilution along the way for a company that was capped at $2.3 billion before the financing.
Why this is so like absurd and amazing, of course it looks kind of not that way in hindsight, but okay, the Chinese steel makers, they've literally already reneged on a commitment, right? There's already saying like this isn't binding. We're not providing this finance the way that it was structured. So all they've got at this point in time, presumably, is actually just like, you know, a prepay that we're going to take tons. But the entire investment community, including the debt markets, must be thinking like, I don't believe that. You've already shown me that you're not here for your word. Like, how am I supposed to believe that, you know, any of your commitment here is actually going to be like credible and certainly upheld in a court of law? You're taking an enormous risk as a
that they're going to sell the product,
that the steel mills are going to buy it, right? Like they've said they're going to buy it. They said the volumes, but they've already showed that they're not, you know, going to uphold a contract.
I think that risk is actually mitigated because the deal that fell through was with like a China Rail, China Met, and China Harbour. They have signed heaps of MOIs, which became sales contracts around this period in time with steel mills. And they were pretty much spoken for up to 45 million tonnes. And in short order, there was demand beyond. I think the investors could see that the demand for iron ore was growing gangbusters. There were so many steel mills coming online. These, you know, if they weren't all sort of solid yet, the sales contracts were becoming solid, and that was diversified across, you know, dozens of steel mills that wanted product, you know, big and small. So I think, you know, just seeing the way China was growing more broadly, investors were at ease that no matter who it's coming from, there will be demand for this iron ore.
Gotcha.
But certainly risk, certainly a whole heap of risk going with it in a massively sort of crammed in time frame.
Should we play the video?
Let's play the video.
Unfortunately, when the bond rating did come out from Standard & Poor's, and it was very late one night that we heard, so it would have been early Australian time, late New York time, the number or the rating that they were giving us was 2 levels below where we thought we were going to be. And I remember going to bed that night, and it was probably midnight, thinking, I'm dead in the water here. The company's dead in the water here. This is not going to happen. And everybody's going to walk away from this.
They wanted to go different to Moody's because they're competitors. And we were the sacrificial lamb in that stupid game. And secondly, they were being fundamentally lazy in looking at the strength of the proponent, not the strength of the project, in which case the mining industry could only be developed by the existing players. And I explained, if you propagate that process, the mining industry is going to die, and you will pay so much more, and your children will pay even so much more, and your grandchildren will pay an astronomical amount because you didn't rate mining companies' projects on the strength of the projects, but only on the strength of the company. And that means the whole world's mining industry, if left to you, will only be run by BHP, Rio and Vale. And they'll set prices at whatever they like and control supply because you established their monopoly. That's, well, can you put any more money into the project? I said, yes. If you give us a double B rating, we'll put it in another 100 million. But you've got to say yes or no now. It's getting on. You know, we're going to wake up tomorrow morning to the press that you gave us a single B and that this project's dusted. And so the lead guy said, done.
I woke up very early the next morning, maybe 6 o'clock, went straight down to breakfast, and there's Andrew sitting there looking very chipper and happy that he was feeling pretty good about the world. And I said, why are you so happy? This is not good. And he said, well, we've managed to get the bond rating that we wanted. And I said, what do you mean? And it turned out, as I discovered later, that he was up all night talking to Citigroup, talking to Standard & Poor's, and he managed to talk them up 2 levels during the evening. And I remember the Citigroup guy said, I've seen bonds talked up one level before, but 2 levels is just unheard of.
We went through $1 billion fairly quickly. We got up to 1.5 and then everything slowed up. And we were really quite nervous about whether we were going to get there.
And they were due to close the bond within an hour or two. So Andrew managed to pull an ace out of the hat. He went to plan B. He called a certain person and he said, well, what do you need, Andrew? And Andrew said, I need you to guarantee that you'll put $150 million into this bond issue if we need it. And there was a silence that seemed like forever, with our hearts beating hard, because we knew we were playing our last card. And he came back after what I thought was forever, was probably 10 seconds, and said, Andrew, I'd be happy to help you. So we looked at the Citigroup guys, they looked at us, and within minutes we were watching the bonds be posted and ramping up towards $2 billion. And within a couple of minutes we were ringing the bell because we were over the top. We were just over $2 billion.
Would have been about 3 in the morning. The text came through to say, we've done it, we've closed it. Just, and I mean, it was close. We just sort of rolled over that line, only just. And there was a real sense of euphoria, and you could get it across the line from the people in New York.
I literally could feel my heart inside my body jumping up and down at that moment.
Isn't it something?
How cool is that?
Wow.
Awesome.
He talked the bond ratings up too, not just...
Fantastic. So what they signed was debt that would mature over 5 to 10 years, a few different sort of bonds. They would be paying around 10%. And from this point in time, the share price just goes parabolic, if it hadn't already. They sort of see it fly to $13, and then it just goes beyond. I'll put a little chart there. You don't compare it again like for like, but you can just see exponential sort of chart, and it just sort of goes flying. This is
one of the biggest bit of uncertainty is financing. Well, there's more uncertainty to come on. I've got no doubt, but this is an inordinate kind of capital raise, and a lot of people were probably thinking there's going to be a lot of dilution to the equity in the pursuit of the development here. And all that's gone because you've got enough money now. Fantastic.
So late 2006, everything just clicks into gear. They moved to doing monthly construction updates, so you can like sort of putting picture next to picture next to picture, see in sort of slow motion that the thing's kind of getting built. Contracts are awarded non-stop. The initial capex at this point is, call it sort of $2.6 billion. They kind of break out infrastructure and mining in a way. Twiggy puts the clock up in the East Perth office. That is ticking down the days till first ore, and it's ticking down the days till revenue, more importantly, with February 2008 being the goal. And things are just gangbusters, and this is the point in time where Twiggy mentions that they'll do an expansion study for 100 million tonnes per annum while they're at it.
What's the perception of Fortescue at this point? Just like how is the company received? How's everyone thinking about the probability that this is going to be a real thing?
I think you could sort of safely say that there was a lot of doubt. Like there's this famous or infamous quote from an Aussie fund manager saying, I'd be happy to be strapped to the railways in early 2008 because I'm not going to be run over by a train. There is skepticism throughout the market that it's sort of, and obviously that sort of changes in part, financing's a big hurdle there. I mean, there's not many backers in the Aussie market. Charlie Aiken was one.
He wrote the famous note, build it and they will come.
Build it, yeah. So I think that was sort of 2007 type time frame, and he was sort of cottoning on to the point that no one else in Australia is getting behind this thing. And
after Twiggy had been barraging him with phone calls to come check it out, come check it out, come check it out.
I don't doubt it.
And I'm sure he didn't want to fly over to Perth. But when he did,
Yeah. So, it changes in time, and the warmness in, reception just day by day changes to the point where diggers and dealers in 2007, and there's not enough seats, they have to lock the doors because everyone wants to just get a glimpse of Twiggy. So, people in their sort of perception can change, and he did a hugely impressive job in changing that by kind of forcing this thing through.
But this bit here, when you've got the money and it's all systems go, this is when like the feel around that company, because you have to mobilize an inordinate amount of people who are all now given an extraordinary amount of like autonomy and leeway to to go do something that's never been done before in some ways.
Yeah, 100%. And there's actually one approval that they still need, which ends up delaying the project a few months. They need to get approval to build the rail through this area known as Woodstock Abydos. And this was a protected area from any sort of development under the Aboriginal Heritage Act, going back a little way. So Twiggy made the case to the sort of relevant minister at the time that they would need to reroute the train. That would add years, and in true Twiggy style, sort of said that would kill the project. I think other people debated that at the time, whether, could they just reroute it around this area? It was an expansive kind of area, but what they wanted to carve out was a 200-metre strip through which they could run the railway for nearly 60 kilometres. So it's a fair chunk of land. Politically, nobody, as an individual wanted to put their name to approve this thing because it was a bit of a hot potato, hence the delay. But in a classically extravagant pitch, Twiggy makes a statement that he'll sort of strap himself in front of any Aboriginal carvings along the way for when these sort of blastings take place. And they make the promise that they will use non-explosive blasting methods to carve the path that the railway can be built on. And who knows whether he actually did that, but that was enough to get the deal done, and they get the approvals in late 2006. And this is where construction starts in earnest. They're off to the races at this point, and the clock is ticking, and they have pulled in that time frame that they want to build the thing into under 18 months versus the 22 that I'd mentioned earlier.
Under 18 months to build the entire rail, and obviously all the mining operations.
And the port. Dredge the port. They started dredging the port, actually, but all of that needs to come together. Like, if you look
I hadn't even thought about the port yet.
Yeah, if you look at the port headland from Google Maps, like, it's like marshland, and like hence the building of a deep water port is the blocker for a lot of iron ore hopefuls out there. Port Hedland is this one nook where BHP ship a lot of iron ore out of, and they build Anderson Port, which is just on the other side to BHP, and they dredge the channel that they need to do, but that's an expensive task as well that needs to get done. They are also iterating on that component we spoke about before, getting the product that they can actually sell. And this kind of probably better answers your question before in a way as well. They're continuously working with the steel mills. They talk about high grade product. They talk about super valued product. They end up using this super values product that they have, and they go a step further and create what they call FMG rocket sinter fines. Now, this is essentially 75% of the ROM is good for it, good on spec. 25% will be sort of flush through the desand part of the processing plant that I mentioned earlier. It's sort of through a washing facility, and then a portion of that might need a bit of gravity separation as well. And bang, you have your magical product, rocket sinter fines, which is named after the rapid speed, the rocket speed that it burns at in the sintering process before you put it in the blast furnace. So there you go. You've solved that one.
Solved that one.
The year of the golden pig, market cap through $4 billion, 2.8 billion in debt. Iron ore price jumps again. And then there's a really tragic and awful event that hits. This cyclone hits Cyclone George, and it wreaks havoc over Rail Camp 1, which is 100 kilometres to the south of Port Hedland. 2 fatalities occur. Over 700 people are evacuated from the Pilbara down to Perth. It was the most powerful cyclone to hit the area since the 70s, and obviously that's a shocking experience for everyone involved. And unfortunately, in the construction process, a contractor would die in 2008 as well in an accident there. Sort of awful events that would have affected the whole team undoubtedly. With regard to the cyclone, remobilisation happens over the space of a few weeks. It does push the whole project out, and I'm sure everyone's quite shell-shocked after that. It adds significant cost as well. I'd heard numbers of $100 million. CapEx is sort of upstated to $2.9 billion. And yeah, I'm sure this was just an incredibly tough period in March of 2007 for the whole organisation. Bit by bit, they sort of regroup and get themselves together and start sort of building again, getting the team switched on to expanding the project, expanding on the previous kind of expansion attempts, which I think is a bit testy with a few people out there. I mean, they're not even halfway through building their 45 million tonne per annum project. Not a single tonne has been shipped. So I think you can imagine the expansion plans at this point in time are ruffling a few feathers, but the company gets through this point in time, and I think that the sort of focus comes back in sort of mid 2007 after those kind of events, and they capitalize on the stock's love in the marketplace, and they actually do a capital raising at an astronomical valuation. So they go on to raise $500 million in this point in time in 2007, dilution of 5%. So they were a $10 billion company.
Yeah.
Leucadia maintains their stake. JP Morgan works as lead manager. BHP terminates their relationship with JP Morgan after that.
Really?
Yeah. Yeah, how good's
Oh
that?
my God.
Yeah. And
Wow.
I think, looking back, this was a fantastic capital raise to get done. 500 million at this point in time.
They're paying interest on, pretty substantial quantity of debt. You want to have a bit of breathing room at the exact same time.
Yeah.
Your spending is through the roof during these final stages of construction.
The stock goes on to run to $60 a share. It is, at that point in time, the 29th largest company in Australia.
$60, which is equivalent of $6 in today's Fortescue terms. Yep.
Yeah, so in December of that year, they do the stock split. Aussie dollar is powering up. At this point in time, for a bit more context, BHP makes its play to merge with Rio Tinto.
Uh-huh.
So this is the golden times, And on that one, Twiggy just threw the book at it. He's like, this is anti-competitive. The consequences would be disastrous. But yeah, we're at a point in time in the end of 2007. The project is 80% done. CapEx is $3 billion now. They've burnt through, or they're factoring that they'll burn through all the contingency cash. FMG still has a few $100 million left in its coffers. And the rail is the big block, and they're just going gangbusters. They build more than 3 kilometres of rail in a day. Like, I find that hard to wrap my head around. I sort of cycle past the rail here that they've been working on for the better part of half a year, fiddling on the sidelines there. To think that near kind of Subi there would be built all the way to the city in a day is hard to visualise, like, it's so impressive. It's like, so impressed by that. And they get it done. First ore on ship, they hit the target, 256 kilometres of rail, cloud break through to Port Anderson there, $3.2 billion all up, 10 million man hours worked, 330 contracts, 420,000 rail sleepers, those things on the railway, so many permits, so many people responsible beyond the one. Like, the team has swelled to 1,200 employees, not even including the contractors.
Just imagine the inordinate amount of things that weren't even in the public domain, like the obstacles that had to be overcome, the relationship dynamics to manage and get past. Like, so many of the project delivery pieces wouldn't have even emerged in the public domain.
Absolutely, and Twiggy becomes the richest person in Australia. The first time in 20 years, someone not called Packer is the richest person in Australia. The highest dollar value ever at the top of that list. In July, the project is officially completed. And to go back to that 22-month construction timeline, like, this is super, super important. Had that been completed in 22 months, they would have finished the project right in time for Lehman Brothers to go bankrupt in the absolute gnarliest part of the global financial crisis. So pulling that in and just working gangbusters to get there was super important. The iron ore benchmark jumps 80% in 2008. Think about the compounding on all those other jumps we'd said. From that point, it jumps 80%. It's north of $150 a tonne. Like, the cash flows coming in straight away, like a thing to behold. And it was less than 4 years from the first hole in Cloudbreak to the first ore and commercial production.
Far out. All of the infrastructure built, everything.
That is mind-boggling. The whole thing is just remarkable. Jaw-dropping kind of stuff.
And in the fullness of time, like, it didn't matter that the realizations on 58% were punitive compared to what was forecast, because, my God, the iron ore price just covered over all of any of those blemishes. Like,
covered a lot of sins, yeah. costs would rise dramatically, as you'd kind of expect when the times are so good, and then they'd have to tighten their belt dramatically as well in the years that follow. But that is the story. That is 2003 to 2008. That is, hopefully sort of did it a bit of justice to capture kind of what happened there, because I think it's remarkable. And the journey beyond that is like so interesting. Learning what happens in the years following, you could chat for hours about it. But I think there's a number of lessons, and I'm keen to chat through this with you, mate, to pull out what kind of stands out, the thoughts, the themes, because there's more than a handful to speak about here.
We've got to start with the obvious one, and that's just the entrepreneurial kind of story that's underpinning all of this.
Yeah, like never taking no. Like nothing is not achievable, and that's not just like Andrew Forrest. That's the whole kind of team. I gave the little anecdote about the marketing team going to China, not taking no, but there's this great snippet where Eamon Hannon, one of the GOs, the sort of head of exploration, is sort of speaking and is saying, I would not have a single person out there on site that didn't think it was a foregone conclusion that we were going to discover the ore. That stuff is incredible. That attitude is like, you can kind of feel it. And with Twiggy himself, it's kind of clear as day. Everyone knows the energy and the salesmanship on that part, but it built through the whole team, and people that weren't believers weren't along for the journey. They just wouldn't be a part of it. Another theme is like the learning from the past lessons. So we spoke about what they did with the contract. That's a massive one. The thinking about debt like didn't change massively. Still a big fan, but utilized and did the equity raising at a phenomenal time. Like took the cash when it was there, and that was a very, very smart decision in hindsight. Another one of those lessons is that like Twiggy wanted control. He has had 35% plus of this company since day dot effectively. And he didn't want to be pushed out like Anglo were able to do and Glencore and stuff were able to do in the early 2000s. And it's not going to happen when you've got 30+% of the company.
He wasn't even willing to forego, a minority stake in the project. Like the equity in the company and the project, it was non-negotiable. Like he didn't even resort to selling down the rail in due course when things would ultimately get fragile again.
Yeah,
like everything was retention of equity at all costs.
Yeah, it's sort of all in kind of stuff. And then there's like the different approaches that they took, and this probably comes off the entrepreneurial kind of component you mentioned. They took a different approach to the assumed knowledge that was in the industry in so many different facets. The mining machines, coming up with a new geological model for how these ore bodies would sort of exist in the Pilbara, the processing front, the marketing front, the rail, the heavy sort of haul, using the US bond market as opposed to going to banks in the more commercial kind of split. Like that is a handful, but there is so many more that you can sort of speak about, from like ore handling, rail unloading. There's a whole bunch of these innovations that they came up with that were different to the pack by necessity in a way.
Like the company didn't have a DNA to start with. That's what's kind of like also fascinating about it. It's not an established company that had to build its own identity in like, it goes from a shell to, an iron ore producer that built a port, a rail, and discovered a mine all in the space of 5 years. It's a true startup competing with incumbent giants, and I think like there's something about the Australian culture as well that when the chips are against you, or where it feels like you're the underdog, it's actually so much easier to dig into the gritty part of you that wants to prove everything wrong. And I think Twiggy, like the type of leader he is so good at tapping into that as well. I've got no doubt that the people at Fortescue would have worked like absolute dogs during that period of time, but they were like, I'm sure Twiggy had the part of him that could speak to that, desire in
you tell them you're
everyone.
building the Sydney Harbour Bridge here,
Right.
You're building something iconic in Australia.
National interest, yeah.
Yeah. 100%. That is phenomenal. And the culture part is really interesting because I'm always of the view that the founder sets the culture of a business, and the culture of the business is the founder replicated. Like I think that is, you see that case in point throughout kind of history. I think the Northern Star narrative is similar. And you see it so often because they hire people sort of like them or people that they think can do the job in the way they want the job to kind of get done. And that breeds itself through the company. And it worked massively to their success. And it's certainly not for everyone, but it worked in this case.
You talked about the past, like Anaconda being informative. There's at the core, like there are a lot of like logistical hurdles to overcome, but the processing component of this was much simpler. Like the logistics, enormously more complicated to solve, but that's a game of scale and financing and execution. But there's less reliance on the processing methodology here.
Yeah. Like you said, I don't want to be anywhere near an autoclave.
And then there's another reflection I was having as you were speaking was like, where the hell did he get the foresight from that China was coming and that this was a huge thing and I've got to like move in a big and bold way? Like when he took that year off, did he go to China? Like who was he? Who did he get this? Like where did all that come from?
All I could find is that he'd gone to Europe with his family. He would have been reading stuff. I think there's a few different facets. I don't know what actually like gave him that inspiration. Maybe he's just sort of speaking with people and it kind of came about organically in that way. The other part of the story that we mentioned earlier is that the majors weren't doing any exploration and that was the opportunity. And yeah, I mean, it is hard to sort of put your finger on exactly. I'd love to kind of hear that, but it speaks to the broader point of the whole theme of China in this story. Like the iron ore price and the insatiable demand for steel as China develops is the sort of theme that runs through the whole story here, the super cycle as everyone kind of calls it. And he certainly drew a lot of attention to that. Like iron ore goes from 30 odd bucks to nearly $200
in a time when supply is also exploding. Like fathom that. Yeah.
You've also got the steel mills though wanting to break that oligopoly. They don't want to buy from like BHP, Rio Tinto, and Vale. And I'm sure they were even more scared at the idea of BHP and Rio Tinto merging than Twiggy was. They were terrified that they could price the iron ore at whatever they wanted. So that sort of ran right through, and that's why they were happy to work with FMG if they could kind of get it together. So I also think there's a kind of nuanced point on this that Twiggy's way of doing business was much more attuned to the Chinese way of doing business than the Korean or Japanese way of doing business. So like, I haven't been to China. I'd love to go, but from what I've heard, this directness worked and sort of jived in much better with their sort of style of business than the much more formal approach in Japan, where you have to form relationships over a long period of time. And, Japan and then like later Korea, they were the iron ore, they were the steel market when, the early iron ore mines were built. So this project could not have been built in any other 5-year period of time than the 5-year period it was built in. And that is a combination of the right macro settings and the right people up for the job. And that beds in with the idea of, were they lucky? Because you always hear people say like, oh, he was just lucky. That's why he's the richest person in Australia. And I don't know how you can sort of hear the story and think that, because his skill set was so uniquely suited to what he did. And yet other people made a lot of money from the commodity boom and from the iron ore market. And there's all the bigger kind of luck with these entrepreneurs, that he's born in the settings he was born, all these kind of things that you have to take for granted.
Luck is where preparation meets opportunity.
100%. And he just grabbed that opportunity and didn't let it go.
Yeah.
So
the story of Northern Star that you told a couple months ago, and that was a story of phenomenal value creation through like savvy deals, effectively. Very savvy deals, like tremendously savvy deals. This is a story of like incredible project execution against all the odds. Both of them had the backdrop of a commodity boom over the duration of the building of those companies. But you need that. But if you don't have the execution or the other part, then it doesn't come together.
Absolutely. And the thinking big, like they thought so big from the beginning. Like they didn't want to be a 15, 20 million tonne per annum player that would be beholden to someone else's railway, because that's what you would be if you're not of scale. They thought enormous, and it was all or nothing.
The barriers to entry were enormous. Like you had to build a port, a rail, find the deposit that wasn't already hoarded by the incumbents. Like it's I
When you
can't
think
think
of
of
it, yeah.
more challenging like barrier to entry to, and it's capital intensive. Like
When you think about like businesses around the world, all different shapes and sizes, like these are some of the biggest barriers to entry in business. This isn't a tech startup,
overcome by a shell.
Yeah, yeah. Just it is incredible.
Yeah.
We've got to touch on the national interest part as well. Both the FMG logo and the Anaconda logo were an outline of Australia. That's one. Just tapping into, and Twiggy would sort of associate, he'd brush shoulders with John Howard and the like. That actually reflected well overseas when people would see photos. By association, you think, hey, this guy's mates with John, So whether there's any sort of truth in it is another thing. Having the office in East Perth, away from little things like that, at lunchtime you're not going to see your mates at BHP or anything like that. They're isolated in a little way. Twiggy sold a bit of stock in 2005, didn't sell for the rest of the journey really, just sort of, and that's been the case even more later on. Like after this, he goes on margin and buys stock. Like
the dividends have been tremendous. Yeah,
they have been.
There's so much of this like story that gets left out. Just, I mean, you have to focus on part of it. And but do you think the formation is more important than what would ultimately kind of be the rest of the story that comes later? Because they experience tremendous vulnerability, and in some ways, you talk about luck again. Like the Vale tailings dam disaster, is a pretty lucky phenomenon that will occur in Fortescue's later periods too.
There's so many moments when they came to the brink again, like we were chatting about the other day, when they're stripping ketchup out of the shelves, no knives and forks and cutlery in the offices or anything like that. They're going down to the bare bones. So, yeah, the rest of the journey is fascinating, and you reflect on other parts of like how they were thinking about the business earlier, like open access infrastructure. They were begging to get on BHP's line. They would not let anyone get on their rail line. That's for sure. So that's something you just got to kind of laugh about.
They they're not. They're probably pretty protective of their own infrastructure these days.
Not a charity.
I certainly imagine. Yeah.
I think the last kind of question I want to put to you, mate, is what do you think would have happened otherwise? I think this is a really interesting way to think about the story.
I don't think this gets built. Like, I feel it's often hard to say that in almost any industry or whatnot. If you remove the founder, remove the founder. Like I don't think these projects get developed. I don't think we have with a third major exporter of iron ore out of Australia. I don't think you have what would ultimately prove to be like how much tax have they paid like over corporate tax and the likes. How much GDP has this company generated? It's phenomenal. It's inordinate.
How many individuals have earned a salary from Fortescue?
Crazy.
Yeah,
mate. I think the like I can't think of another individual like and Twiggy doesn't take all the credit. I'm sure the team takes an enormous amount of credit. But if you pin it all back, if you remove Twiggy from the equation, I can't think of another individual that if they weren't there for that moment is responsible for so much like GDP, opportunity cost, like tax revenues for the country, for Australia, go Australia, than Twiggy. I don't think that's an appreciated kind of part of this story either.
I think you're right, and that's part of the reason I found it interesting to talk about this, because he's a man that everyone how many negative articles have been written about it, and obviously there's flaws with the character like any, but I think it's worth celebrating in that regard, because the value creation, which obviously he benefited from tremendously, but many other people did so well from, and Australia did phenomenally well from, is a hell of a story. And maybe if this doesn't get built, iron ore would have been even more expensive. Maybe projects bit by bit get developed in other parts of the world, but would this have been like discovered? Like, in the matter of time, but maybe still not to this day, maybe that's something still down the track. I don't think anything close to this would have happened if he hadn't sort of catalyzed it.
Oh, totally, mate. Like, I'm in complete agreement on that front. I think it's the greatest story of value creation that's ever existed on the ASX, like from nothing to a titan. Who would have thought you could become like a true major in that sense of a mining company in the space of like 20 years? It took them a lot less than that, but it's crazy. It's crazy to think.
Yeah, it's significant. Like it's incredibly significant across the whole Aussie business sort of landscape. Like there's obviously some wicked companies in heaps of different stripes out there, but just an incredible story. And
the other bit too there that like we might have touched on is just like the ability to dust yourself off after an absolute catastrophe from an equity sense. And we wouldn't have had much money or anything like that. Everyone that put in money to his thing would have lost money. I'm sure he probably promised the world in that as well. But just to dust yourself off and have another crack, like there's a lesson for us as well in like just rewarding the risk taking of being an entrepreneur, because sometimes sometimes it turns out great, sometimes it doesn't. But if you don't get back up and have another crack, then you never get any of the possibility of tremendous value creation.
Totally. And like long may the sort of investment community back people like this, because to do that, and like you said, to do it after such a public downfall is just incredible. And it would have been very easy just to hide away, So I think that's a good point to wrap a bow on the episode. Like this episode came together reading 20-year-old announcements. So I'm sure the interpretation of a lot of these public releases might have been a bit off, and there were bits that were abbreviated and kind of missed along the way, as well as stuff I'm sure I just got wrong. So happy to be corrected on a bunch of that. But yeah, like some wicked sources out there that FMG put up, some books written on them, like the Twiggy book is a really interesting perspective as well. So many news articles across all different bits of media, from the AFR, the Australian, the West, the Morning Herald, and all those sorts of things that sort of helped it kind of piece together. And they all sort of deserve sort of credit for writing the story along the way. But yeah, what a story it was, mate.
Go Australia.
Go Australia.
Should we watch the Go Australia from Twiggy? Yeah, let's play.
Yeah.
Go Australia.
Now remember, I'm an idiot, JD's an idiot. If you thought any of this was anything other than entertainment, you're an idiot and you need to read out a disclaimer.